Welcome to my channel. Today I thought I'd share with you a bonus video on life insurance. And I thought I'd bring it to you especially for Valentine's Day. So happy Valentine's Day wherever you are. Hope you're having a lovely time with your loved ones. I know it's a grim topic to talk to you about on Valentine's Day, but in my opinion, there is nothing greater that says I love you to your partner and to your family, that you care for them even beyond your lifetime. So that's why I thought I'd talk to you about life insurance. In today's video, I'll cover who needs a life insurance, because not everybody needs a life insurance. I'll also discuss if you need a joint policy, a combined policy, how long you need the life insurance for, and most importantly, a big mistake I have made because of that mistake, I am uninsurable for my life insurance, and hopefully you can learn from my mistake and never don't make that mistake again. So firstly, let's look at who needs life insurance. So not everybody needs life insurance. You mainly need life insurance if you have any dependents, especially if you've got debt like a mortgage. So if you are the breadwinner and if you pass away, the bank will need their money back, their prepayments back. And if you do not have any facility to pay off the house or pay off the bank, your house will be repossessed by the bank and your family will be left distraught. So once your house is paid off or you do not have any more dependents, your children grow up, you perhaps don't need life insurance. Then you can weigh up the pros and cons and decide whether it's worth that maybe 15 or 20 or 25 pounds that you're paying per month for life insurance. So it's very essential if you've got any dependents depending on your life and salary. So now, instead of throwing out all the facts that you are reducing term mortgage or term in life insurance or joint policies, etc., I'll just tell you the thought process that we went through when we finalized our life insurance. So we've got two different policies. We've got a reducing term mortgage and we've got a term life insurance. So for the reducing term mortgage, this is linked to our house. So it is linked to our mortgage payments. So when we took this policy back in 2019, the outstanding balance on this house was around £250,000. So it was linked to the mortgage value at that time. So because it is a repayment mortgage, so we pay some of our capital as each month. So that is why it is called a reducing term life insurance. So the value of the life insurance reduces each year in line with the mortgage. So because the value reduces each year, this reducing term life insurance tends to be cheaper than a whole term insurance, which I will get to. So the length of this policy is linked to the term of the mortgage. So when we took it back in 2019, there was 22 years left in this mortgage. So the term of this reducing term mortgage was 22 years. So now it's reduced to 20 years. So we could have paid for a joint policy wherein if partner 1 dies first, you get the house paid off. Or if partner B dies first, then you get the house paid off. Or if unfortunately both of you were to pass away at the same time, then the house gets paid off. The joint life insurance tends to be cheaper than two single policies, but we've got two single policies, and I'll tell you that in a minute. Because with the joint policy, the lump sum of cash is only the ones, whoever dies, once partner A or partner B dies, you get the lump sum of cash for the house to be paid off just the once. So this joint policy tends to be cheaper than single policies. But we chose to have two single reducing life insurance policies, wherein if partner 1 dies, we get the house paid off. Partner 2 dies, we get the house paid off. If unfortunately both of us were to pass away together, we get the house paid off and we get a lump sum of cash for our children. We mainly chose that because our children were young and we do not have a lot of in terms of assets and things for our children to fall back on. So we thought that was a nice balance of having the house paid off and a little bit of a lump sum of cash. So like I told you in the beginning, although we applied for the life insurance, only my husband got approved for the life insurance. I did not get approved because of a big mistake, and I'll get to that mistake in a minute. But besides the reducing term life insurance, we also have a term life insurance. So this is a second policy we have. So with a term life insurance, you get a lump sum of cash and that value is set. It does not reduce like the reducing term life insurance. And because it's a larger amount, it's a set value of a larger amount, the premium tends to be slightly higher. So we've got a term life insurance only for my husband, and I'll explain the thinking behind that. So he is the main breadwinner of the family. I mainly work around the children and the family commitments and things. So without his salary, our house would be in a pickle. So we've got his a reducing term life insurance, so the house would be paid off. And because he is the main breadwinner and we depend on his wages, we have a second lump sum of cash, a term life insurance, that if something were to unfortunately happen to him, the children or us, we would get a lump sum of cash to see us through for a few years. And then possibly I'll have to start working or find ways to bring in more money to the family. If you look at all the advice on the internet, it's been said that you need to insure the main breadwinner's salary for 10 times till the youngest child is out of full-time education, so till the youngest child is 21. But we found that way too expensive. So what we have done instead is we've insured a term life insurance for my husband for 25 years, so till he reaches retirement age. And this is for a lump sum of £300,000. So the house is paid off and we get a lump sum of £300,000 to see us through for a few years before I pick up more work and bring in more wages that way. So we as a family decided not to have a term life insurance policy for me, mainly because of the cost aspect. So obviously I bring a lot to this family. If I were not around, possibly my husband would have to reduce his hours. We probably need some more expenses for childcare. We'll have more expenses with tuition fees perhaps. Maybe some expenses for transport to take the children from one activity to the other when there's activities pre-COVID this is. So there will be a lot more expenses or reduced salary if something were to happen to me. But we decided that because I've got a reducing term life insurance and the mortgage would be paid off if something were to happen to me, the additional expenses would be covered this way. So I do not have a term life insurance. The term life insurance policy is only for my husband. But unfortunately, I did not get approved for a life insurance policy. So we started applying for a life insurance policy back in 2019, around November, December time. So my husband got approved straight away and he got the policy up and running straight away. But because I had some pre-existing conditions, the life insurance wanted to write to my GP and get a letter from my GP with my pre-existing conditions and things. And perhaps I sat on the form for a week or two before sending it to my GP. And by the time the GP sent it back, it was early February of 2020. So we all know what happened back in February and March 2020. COVID was starting to take over the world. So the insurers got a bit worried and they refused to insure me till after the COVID crisis. So at present, I do not have a life insurance policy. So this is a big life lesson. Do not wait till you're uninsurable. Maybe you're uninsurable due to a medical condition. Maybe it is due to a pandemic like it is for me. But take the life insurance policy when you're fit and well and healthy. That way the premiums will be less. My premiums are higher than my husband's, although he's a couple of years older than me because he is fit and well and I've got pre-existing conditions. So do not wait till you have got pre-existing conditions. Your premiums will be higher at that time and maybe you will be uninsurable as well because of whatever life situation. You need to review your life insurance policy every 5 years or after a major life event. So if you've got a new house or a new baby, or you've got married or remarried, or if you've unfortunately got a death in the family, so you need to review it every 5 years or with a major life event. If you're listening to this from the UK, please put your life insurance policy in a trust. It's very, very easily done through the company that you've got your life insurance with. It is just an additional piece of paperwork that you need to fill in. There is two big advantages of putting your life insurance policy in a trust. Number one, it sits outside your estate. So if you have inheritance tax liabilities and things, it is better. But the second advantage and the biggest advantage in my opinion is if you were to pass away and the life insurance is not in a trust, it falls in your estate. So it goes to probate and things. So if you have a life insurance that's linked with your mortgage and things, probates can take up to 6 months to be cleared. So for 6 months, your family is struggling for mortgage repayments and things. So you do not want to put your family through money worries when they're already mourning for you after you've passed away. So put your life insurance policy in a trust. It's very easily done. So just to summarize the things that you'll need to look at before deciding on your life insurance plan. So you'll need to decide whether you want to have a reducing term life insurance policy or a term life insurance policy. You'll need to decide on the length of the policy. Usually, if it's a reducing term, then it's with the length of the mortgage. If it is a term life policy, then you might need to look at retirement or when your children no longer become dependents or your family no longer become your dependents. Then you need to decide the amount of money that you want to be insured for. You need to decide between a single policy or whether you want a joint policy. And I've told you a bit of the rationale behind my decision. Another big factor to decide is the cost of the premiums each month. Obviously, all of us want to be insured for the maximum sum of money, but then that comes at a cost. So it's deciding between what is the ideal scenario and then what you can afford to pay, and then working on a compromise between both those factors. And each of that factor will differ from family to family. Also, insure as early as possible. The older you are, the premiums get higher, or the other medical problems come along, and then your premiums get higher that way as well. Or maybe you're uninsurable like me. And lastly, consider putting your life insurance in a trust. It's really a no-brainer. So if you do one thing today on Valentine's Day to show how much you love and you care for your family beyond you and your lifetime, make sure you've got your life insurance policy. I used to think it's completely wasted money, 15, 20, 30 pounds per month. I could easily save or invest that money. But we all know, especially during this COVID crisis, we all have heard and seen people who've actually, the main breadwinners lost their lives and their families left in real distress. Wanting to keep a roof over their head or even food on the table. So you do not want to ever leave your family in that crisis. So make sure you've got a life insurance policy. And if this video has helped you or have given you any food for thought, please give me the thumbs up like button and share this with your family and friends. Before you go, you may want to check out these other investing videos. Thank you for watching me today. Stay safe. Enjoy your day. Bye.